let's start with the last talk of this session. And I think some people ran out to grab a drink or so, but I will for sure come in. Eduard, I introduced you already, a former colleague of ours, and now telling us how the digital euro will affect the manufacturing industry. I'm really looking forward to it. Thank you so much. And Eduard, the stage is yours.
Yeah, hello from my side also. My name is Eduard Grün. I'm with GFT Germany. And yeah, as Jan already said, I want to talk to you about the effects of the digital euro on manufacturing industry. The European Central Bank is talking about introducing a digital euro since, I don't know, 5 to 6 years now. And finally, last year, they decided to start developing. Beginning this year, the companies providing the technology for the digital euro have been chosen, and now they are starting to specify stuff and will start with the actual development. So that means in the timeline we have like 3 to 5 years till we all have a digital euro and can use it. And I think today is a good time to look into what can we do with the digital euro and how will this affect our industry. But first of all, what is the digital euro? Well, the ECB defines the digital euro as a digital clone of the physical euro, so it should have all the aspects of the current physical currency we have. That means it's issued by the central bank, like your coins and banknotes you use every day, and it also can be used every day for everyday purchases and transfers. With a little caveat that it's limited to 2,000 euro per person. And it should be as safe as physical cash. So I hope we won't see any breaches on that, but yeah, time will tell. And in addition to all these, I would say, physical aspects, we will get new features with this digital euro. First of all, it's, well, digital, so that means you could use it with your smartphone, your web app, your computer, whatever, and even with our machines. And it will be programmable. And that opens a whole new space of possibilities and use and business cases also in the manufacturing industry. And the last new feature which will be introduced, and I think that's also the main reason why so many central banks are currently working on their digital currency, is transaction will get faster and cheaper. So that means for us as customers, I don't know, anybody of you used already real-time transactions, Sofortüberweisung? Yeah, how much did you pay? 0? Really? Oh, you have a good bank. I pay like 3 euros for that. And that means with that new technology, even that will be for us as retail customers for free. To get this into the bigger pictures, the digital euro is a so-called central bank digital currency. As I told you, many countries are working on this right now. Yeah, it's a digital form of the country's official currency issued by the central bank. It may be based on blockchain or other distributed ledger technology. So that's where this cheap transaction and security comes from. It could be programmable, depends on if the country wants that. And yeah, it's faster and cheaper, as I told you. But, and that's a big but for me, we will get some privacy concerns. If you use your banking account right now, you could have as many accounts as you wish at different banks. So that means your payment streams and money transfer are somehow opaque. So you don't really know what's really happening right now. If we get a centralized digital currency, there may be the possibility that there is some single instance which oversees everything, and I think that's a little bit frightening. But right now we're in the EU, which has one of the strongest privacy laws. So hopefully they will also do this for the digital euro. And that's a point why the European Central Bank is struggling with this whole topic and taking so long, that will have an impact on traditional banks. So right now, you have an account with Sparkasse, Deutsche Bank, whatever. would you still have that account with that retail banks, or would you go to the central bank? So that means if they introduce a digital euro, that will somehow cannibalize the banking landscape we have right now. Nevertheless, over 134 countries are working right now on a digital currency. I think the most prominent one is the yuan, which is in China. So that got some prominence with the Olympic Games 4 years ago, which foreigners had to use the yuan to pay anything there. But even this project is in a pilot phase. So there are several towns where you could use the yuan, but it's not available in whole China. On the other hand, there are currently 3 countries which have already rolled out their digital currency. That's the Bahamas, Jamaica, and Nigeria, where the citizens can use the digital money every day. I think the main reason for getting a digital currency for these countries are the cheaper transaction fees and also a better inclusion in financial inclusion. So if you go to third world countries like in Africa or Asia, they don't have that good and tight banking network we have here. So if people have cash, then they store that in their pillow or burying it somewhere. So that means if they have the accessibility or if they can access their money digitally, because, well, you know, all of those guys have a smartphone, that will benefit for the whole economy there. So as you see, the CBDC or the central bank digital currency is a big topic. The whole world is working on it, and those different currencies will be interoperable with each other, which means we will even get even cheaper and faster transactions between countries, and that means we have more use cases in manufacturing. And I want to show you what that means and what might be possible if the digital euro comes. First of all, I think we'll see a simplification of the payment streams. On the left side, you have a machine builder and a manufacturer. The manufacturer orders a machine at the machine builder, and to pay that, the manufacturer will first go to his bank or its bank and get a loan to pay that machine. Pays the machine, the machine builder sends the machine, but before it could build the machine builder had to go to his bank also to get a loan and be able to produce that. If we have digital money, we could streamline that and introduce something like pay-per-use, where the machine builder will get the machine out to the manufacturer for free. The manufacturer uses it and pays for each usage directly to the bank. And to incentivize this offer, he also will get machine data back to the machine below, which then can use that to improve the machine. And we could draw this picture a little bit bigger, where not only the machine builder, but also the automation suppliers like Festo are involved, and they ship out their automation equipment for free. The machine builder builds it, gets the machine to the machine user, and then at this stage we have some payments or usage fees involved. And there is something like a central payment solution provider, which we need right now, because everybody involved in this chain has to get somehow its money, which makes this picture quite complicated. If we will have some programmable money, that means the picture will be much more simplified, because we don't need this central entity, because the money knows where it has to go, which makes such a scenario much more feasible. So let's go on. Now the manufacturer got the machine, starts to producing, and naturally he needs some supplies which he orders within his supply chain. These orders arrive at the manufacturer's plant. And what we can do now with digital money is like instant payments for the supplies, either when they arrive at the plant, or even we could do fractional payments, like for each screw we use while we are assembling the product. This reduces the transaction costs even more, and also we don't we could streamline the just-in-time production processes. If the machines are working, or the assembly line is working at the manufacturer, and we have some downtime, for now that means, well, okay, I have to cope somehow with that. But what about an insurance against production downtimes? Because, well, we have sensors in the machines, we know how they are performing, and now with this knowledge we could insure the whole process, meaning if we have some downtimes, we get automated alerts and get automatically the insurance money back. And with this data-driven risk assessment, we could even provide better prices or better policies for the machines. So that means the better maintained machine will cost me less in that insurance than a machine that is always crashing. After producing that machines or the product, the manufacturer delivers those, and now we have something that's really interesting in combination with a digital twin, because now we have a traceability and could further use this programmable aspect of digital money, so that we could incentivize meeting some quality standards. So, for instance, if we get something from our supplier, we check that if the quality is met, and then we can enable a payment for that. Or if we have a product out with a digital twin which knows how it's working, we could streamline the warranty and recall management, like getting the money back as soon as the product doesn't work anymore. Yeah, so that's a couple of use cases. I think you could think about more and more than I. You're more in the topics right now. But the main hindrance right now is, well, there is no digital euro around. So is there a way we could enable those use cases right now? And I think there is. So you are all familiar with cryptocurrencies. These are digital or virtual currencies using a cryptography for security, like Bitcoin, Ethereum. We could use that because, well, that is already programmable money, and they have some value built in, or there is some value. But there is the problem is they are not regulated right now, or most regulations are keeping them out. So it's highly problematic to use that in a controlled manner. And also the prices for these assets are highly volatile. So you don't know, will I pay 1 Bitcoin and the next time I order this, or is it only a half? So there's no planning security with this. That's where stablecoins come in. These are in principle cryptocurrencies, but designed to maintain a stable value. Better known are Tether or Circle, which emitted an euro stablecoin a couple of months ago. And they have these benefits of a decentralized architecture like Bitcoin or Ethereum, but they have the stable peg, and so you could have a planning security, which leads to better usage overall. And also they are getting more and more regulated. So we have the MiCAR, that's the Markets in Crypto Assets regulation in place here in Europe, which allows stable coins. So that means that's a good option to use that as far as we don't have a digital euro. Or we could go further. We don't say, well, we don't want anything to do with cryptocurrency. We could use something like commercial bank money tokens. So that's just a digital representation of your commercial bank, like you have right now with your account at your bank. But these deposits are on a blockchain. So in principle, the only difference is the underlying technology. but we have all the regulations in place that are already here for the euro. So that means we can combine both worlds here in a real good fashion. And even if we want to go a step further, we could use something like trigger solutions. These are software systems connecting traditional banking with blockchain networks to enable a seamless transaction between fiat and crypto systems. So that means we could still have our digital twin working on the blockchain and saving the data securely there, but our payments are still in the old world and using the banking systems we have since ever, I would say. The nice thing, they are available for most bank accounts. If not, companies like GFT can build it. So DLT2Pay is one of the products I'm responsible for. So that's a really nice way to combine all the new world. Finally, I want to show you a little comparison. So we have talked about CBDCs, cryptocurrencies, stablecoins, and CBMT, and also the trigger solution. And I think the most important part is how's regulation working right now for these assets. Am I able to use that for my use cases, which will be for the CBDCs or the digital euro, because, well, these are money which is coming from the central banks. And then we have on the right side the CBMT, which is fully regulated in the trigger solution. And as I told you, the stable coins are coming more and more. And after that question, I think the next interesting part is what is the architecture looking like? Is it a centralized system where some central entity knows everything what's going on there, or is there some privacy built in, or even some decentralized? And that's where cryptocurrencies and stablecoins are shining. With the CBMT, it's possible to use a decentralized blockchain, but you could also use some centralized work here. I think that's a good overview of what is happening right now in the finance industry and how that will affect the manufacturing space. I'm today here to discuss this further, and if you have any questions, I would be happy to answer them.
Perfect. Thank you so much, Eduard. Already the first question.
Thanks, Eduard, for the interesting talk. For me, one of the sort of in the original idea of the whole thing, the big plus side was the decentralized aspect of it. I mean, basically the data storage is to some degree a very centralized one with the transparency sort of enabling feature, but the good thing was the decentralization. And my question is basically, I have a weird feeling about centralizing that thing to some central bank system again, which was basically kind of what we wanted to abolish with the whole idea.
Exactly.
Do you give that thing really a future, given that aspect? I mean, I'm really skeptical that eliminating the one big thing that it brought, only to bring in a way of governing and sort of oversight and compliance. Yeah. Not sure if that will.
As far as I see it, if you look into the CBDC discussion, they are differentiating between retail and wholesale CBDC. So retail is that what we will use, so that's the money the common people are using, and then we have the wholesale CBDCs, which is the money you have right now moving between banks. And if you have these two perspectives, I would say doing that for a wholesale CBDC or for the money between the bank, that makes absolutely sense, because they struggle with their current systems because of latency times and cost and so on. So that will help them immensely. On the other side, if I would use the digital euro in my private life, I doubt it because of the reasons you mentioned. So why should I use something that is centrally controlled? And as I said, when you look into the timeline, the central bank is struggling with this topic because, well, they know if they put out a digital euro for the commoners, that may affect the whole banking landscape, and you don't know what's coming out then there. So yeah, well, they work on both currently, but we'll see what which of those two will come to life, I would say.
Cool, thanks. Other questions? Thomas.
Thanks. Also, much more interested in the digital euro as they design it. Do you think they will have it on a blockchain that everyone could check? So basically, you could check that the euro I gave to you came from a payment partially I got from Charles or something like this. It would be a distributed way, which is way worse for privacy than what we currently have, that my bank knows I receive or who I pay to. Do you think they think about this, or is it something? Also, it is a central
I don't
system.
know what they are discussing right now. I know the two companies involved right now have systems in place, which are decentralized and which have, I would say a configurable privacy. So that means they could put out as much or as less data the country wants. They are both, they are DLT technologies, but no blockchain. But what we have is there are several central banks for the Deutsche Bundesdruckerei, the Central Bank of France, and the Central Bank of Italy already came up with blockchain-based DLTs, blockchain-based currency, sorry. And yeah, you could do that to look up who is owing what or who is sending what. But then you have something like a pseudonymity, so you don't know. You have to know the numbers, right?
Yeah, well, thank you, Eduard, for your talk. I also remember fondly when we shared our office together back then. My question is more to the overall topic that you addressed. How high do you see the acceptance of business models like pay-per-use and so on that are underlying here, especially in the way or in the area of the capital goods and machinery and so on?
Yeah. Depends on the company you're working with. If it's a big company, they say, well, I have the money, why should I do it on a pay-per-use basis? Smaller companies or companies offering to retail customers are more interested in there because, well, they don't have the money, and then if you have a product which gets used like only 20% of its lifetime, like a typical car or a drill. I'm sure you have one at home. How often do you use it? Then it's more interesting. So I know about a project from Bosch Tools. They put a big closet at the Zurich main train station where you could borrow the tools to drill a hole at your home and then bring it back. So I think there's this maker or this how to call it, this economy where you don't own stuff but you lend it out is coming, but with a quite niche.
So you just described a share economy use case with Bosch Tools in Zurich. What is the big advantage for using distributed ledgers in this use case, contrary to using just traditional payment? I put my Visa card to open the box and get the tool for one day. So
I would say that you get everything from one cast. Like you build a system saving this data on the blockchain, and also you can use the blockchain to pay stuff. In contrast to having a more traditional system where you have your databases and then have to somehow trigger a payment on the payment side. And also, if you look back at this chart or this graph where we have many different participants in a pay-per-use or shared economy system, it simplifies simply the whole process of negotiating and sending money first and back.
Okay. Thank you very much again, Eduard. A round of applause, please. Okay.